collecting, and that's what the banks are hoping for, because they'll collect in 3 different ways.
Yes.
Correct? So if you could give a piece of advice to our viewers today, what would you recommend they do?
Well, the first thing they need to do is they do need to get into a modification program. The reason...
How do they get into a modification program?
Well, the government has makinghomeaffordable.gov.
The Obama stimulus package, I think that is.
Yes, and that is on the website. And you can download documents, and you can get your documents together, and you can send it in. The problem is that there is a secret to the home affordable modification
Okay, here comes the
program.
critical part of the interview. What's the secret?
The secret is all of the servicers, who are the ones that make the decision to accept or offer a modification or not. All the servicers use what they call the NPV waterfall. That is the net present value waterfall. And they plug in figures to this waterfall, and if it doesn't show a positive result to the investor by modifying the loan over time, they will not approve the loan.
Really? So what would you suggest then? What would you suggest our buyers do in a situation like that?
I would suggest that the best thing they can do is if they can speak to a HUD counselor. They can speak...
Are you a HUD counselor?
No, I am not.
You're just a RESPA attorney?
I'm just a RESPA attorney. But they can speak to a HUD counselor, but it really...
You go on the HUD, the government website to do that? Okay.
Or they can hire an attorney. And I have a little story to tell you if you have time.
Oh, please share.
I have a friend who's also a client. She'd been working for 2 years to get her loan modified.
Wow.
She had sent the same documents, updated documents. Every time they sent her a letter, she complied as best she could.
Was she getting, in the meantime, was she getting foreclosure letters in the mail?
Yes.
She was,
Yes.
Okay, please continue, I'm sorry.
No, and so she was getting frantic. So she came to me and she said, "This is my last ditch effort. I am exhausted. I don't know if I can keep doing this. I'm seriously considering letting my house go." I said, "Let me give it one try." I said, "Give me your documents." I took it through my NPV waterfall. I tweaked a few things with her. I sent it in, and she got an acceptance letter 2 weeks later.
Wow, that's amazing.
But it's just because working with it, we know what to do and what they're looking for.
Would you recommend to people facing a situation like that that they contact a professional such as yourself as opposed to trying to do it themselves?
I think if you do it yourself, you will completely
get frustrated and not be successful. Okay. Oh, why wouldn't lenders just give principal reductions to ease this crisis? Is it not in their best interest?
Well, I think, one, it's not in their best interest because they're obviously not going to get as much money, are they?
Right. Yeah,
you know,
get paid 3 different ways.
Yes, and the second thing is now the investors have huge lawsuits on Wall Street, and they are being told by their attorneys, don't consent to a principal reduction because it will lower your damages.
Explain what a principal reduction is to our viewers.
Well, what it would be is if you owe $500,000 on a house in Haymarket, and it's now worth $250,000.
Okay, so you're $250,000 underwater.
Underwater, exactly. What you want is you want a principal reduction that's 90% of what the current value of the house would be.
Which would be around $200,000, somewhere around that neighborhood.
Exactly. And before, lenders were actually doing it. They have to get the approval of the investors, but they were doing it because they could see that it would be a benefit to not only that individual homeowner, but to the economy as a whole. But now they're not doing it
because they're so inundated with requests for modifications and such.
And they don't want to lower their damages in their big lawsuits against the original originators.
Are there any other alternatives that you could recommend for our viewers going through a situation like this?
I think that you could do what's called an in-house modification.
An in-house modification. That means going to the servicer that currently is servicing your loan. going to them as opposed to going to the Making Homes Affordable program.
Right. You should always ask your servicer if they say you don't qualify for MHA, Making Home Affordable. You should always say, what other programs do you have? If you have good credit, if you haven't gotten behind in your mortgage, but you just know you're so underwater, you need to do something, or that your interest rate is going to adjust in 6 months, then what you can do is you can try to do an in-house refinance. Never let them just turn you down and think that they don't have other alternatives in their pocket.
What's a HAMP modification? Can you explain what those are to our viewers?
Yes, that is where the lenders are taking the bailout money, and they're using that to stopgap their losses. And they are under certain governmental criteria. If you took government money, you have to offer a HAMP modification.
Is that right?
Yeah. So it's government criteria, and they're under the scrutiny of Treasury as to how many loans they modify, what criteria they're using, and if they turn down loans, you can appeal it, and Treasury will automatically continue to stop any foreclosure actions.
That's important.
And take a look at why they are turning you down.
How can a person going through this situation know if their servicer was part of that HAMP modification or took bailout money, if you will?
There is a list of failed banks that the FDIC has taken under FDIC.gov. And you can, in the search, you can type in failed banks, and you'll come up with the list, and they're always adding to it.
Really? So they're under a little bit more scrutiny, if you will, to help the borrower out.
And the big major servicers, as I said, Chase, Wells Fargo, and Bank of America, they took that bailout money, and they have to participate in HAMP.
Okay, that's important. That's very important that they know that. Why is it that lenders, they already have your loan, they have all your information. Why do they need so much more documentation to modify a loan? What's the purpose of that?
Well, they say that they need to be absolutely up to date on what your documents say and what your actual financial situation is, because they have criteria from the feds, from Treasury, as to what they have, their little checklist of what they have to have, and it's got to be up to date. And that's what's so frustrating for borrowers, because they send in things and then in 45, 60 days, they say send in the same thing. And you're trying to get, okay, I'm going to send you one more bank statement and one more paycheck. But here's the trick. If you don't send it in, they kick you out.
Is that right? Okay, what is the Fair Debt Collections Act, and how can it help struggling homeowners?
The Fair Debt Collections Procedures Act, it was enacted by Congress some years ago, before this crisis. And it was mainly to make sure that people borrowing, people taking out credit, understood what they were paying for these dollars that they were getting, what their actual interest rate was. How it can help them is that they are required to suspend all collection activity for up to 45 days if there's a FDCPA request. And I use it very often, Mark, to stop foreclosures.
Is that one of your tools?
That's one of my tools.
What about other litigation alternatives? Are there anything out there?
There are. There's been a lot of talk on the internet and various other venues about suits to quiet title. One of the most exciting things that's going on in the fight against foreclosures is this idea that the trail of paperwork from the time you sat at your settlement table until the time that it allegedly went into these pooled loans is not done properly. And it's not done in accordance with what the trust agreement actually says has to happen. So what people are saying is, if you're coming in here and trying to foreclose on me, you have to prove that you actually own this note.
We only have a minute left. I want a quick answer. I mentioned restraining order. Can a borrower, for those facing trouble right away, can a borrower get a restraining order against a lender in a matter of days?
yes, it will require filing a lawsuit, which would require a very quick review of their documents. What I find a lot, Mark, is that they have even, the trustee seeking to foreclose has even been appointed invalidly. I have a case where IndyMac appointed a foreclosure trustee 9 months after they were dissolved by the FDIC.
Really?
So if you look at these documents, you can discover these little tricks, and then you can file a lawsuit in the jurisdiction where you are and get a quick restraining order. And most judges, if you allege something like that, if you have some basis, they will give you a restraining order. They'll say, whoa, let's just wait, let the dust settle, and take a harder look at this.
I would like to thank our guest, Karen Kennedy, for being here today. We realize we have thrown a lot of info at you and that you may have questions. If you'd like to view this program again, please visit my website at markrigney.org. You will see a link to this show on the website. Remember, if you have questions, please email us. Our emails are listed on the screen below, or you can visit the website. We will read and answer some of your questions on our next show. On behalf of my friend and colleague, Karen Kennedy, thank you for watching Financial Solutions with Mark Rigney. We will see you next time. That was pretty